Alright, this is the hard right edge. The market is trading in 1896, and let's look over the last couple days here to give a view on exactly what has brought us to this point in the market with swings high and swings low. We're going to start here where the market was trending downwards and the bears were in control. We'll start off by just marking this low, followed by this high where the market made a lower low. This is the end of the downtrend because you can see we made a new higher high here and a new higher low where the market made a lower high. This shook the faith for all of the bulls that were pushing the market up that the market was going to start trending upwards. So you can see that during this day the market faltered, made a low here, a lower high here, and then was quickly pushed down. One of the things on a day like this that we're looking for is short opportunities. The market got pushed all the way down to here. When the market got pushed up again and made a new lower high, again the bulls lost faith because they weren't able to push the market up high enough. A lot of times you'll get a large moving down like this, and you can imagine it's a lot for the bulls to think that they can actually reverse this market. Because consistently, not even looking back, we know we have at least 1 to 3 days of where the market is having lower highs and lower lows. We end up with a sharp fall downwards. They get their first sign, the fact that the market might actually be giving them a bit of a gift where we get a higher high. What every trader here who wants to take a long position is looking for is for a higher high and a higher low to follow this. So here you get a higher low. This confirms in their mind thinking the fact that the market may be starting to turn upwards here. But when it's not confirmed, when we get a lower high here, a lot of faith is lost, and that pushes the market downwards to create a new lower low. Another thing that every trader is going to be watching are the previous day's high and the previous day's low, and how that relates to the current day's trading. So this is the day's close, and this is the day's open. So every trader is seeing the fact that we have 1, 2, 3 days where we've had a lower high and a lower low on the dailies. So on this day that we're looking at, every trader is seeing the fact that we've already made a new lower low. They're thinking, is it very likely that we'll match this very tall box here and make a new higher high? It seems quite doubtful. So this is another thing that weighs on every decision and ends up pushing the market down. Here, they get another lower high confirming this downtrend, followed by a new lower low. The bears are in control lately. Right here we get a higher high, but we'll see if this matches our rule of 2 to 3 points on the hourly charts. So this is at 1935, and here we're at 1936.25. So this didn't actually break this previous high. We're going to consider this to be equal. The market made a good attempt at breaking it, but a couple points here and there can just be background noise. So when the bulls saw that this is as far as they could push the market up, what happened? Well, a sharp downfall. They yet again rallied to create a new high here, but it wasn't significant enough. It was a lower high overall. Here's where the bears started to worry, when they pushed the market down again, but were not able to get anywhere near breaking a new lower low. This gives the bulls a bit more faith, and so the market got pushed up to a new higher high. A new lower low or a valley was in place here, and all of the bulls that were buying here are looking to make a new higher high to reinforce their new power over the market. What ended up happening was they made a high, but it didn't actually beat the previous high, so we ended up with a lower high. This gives validity to the bears side, and this pushed the market down to make a new lower low. As always, the market bounced up, but it wasn't able to make a new higher high here. We got again another lower high. When the market got pushed down, it got pushed down quite a ways to make an absolute lower low, followed by a minor push up from the bulls, but this was barely even a test of any previous areas. This was very petty resistance to the downward move. Again, the market fell and created another low. So we ended up with 1, 2, 3, 4 lower lows in this recent 3-day downtrend. But what we're starting to see is a bit of a reversal here. So we ended up with a higher high, followed by a low and a higher high. Now we have to take these with a little bit of a grain of salt because this was all done during news. Like I said, these doji bars, where they open and close quite similar but have a very long tail, can be a bit misleading because news can have caused panic selling and panic buying. But this trend is continued with a higher low, and now we're actually pushing towards a new higher high. We're not actually going to draw this higher high yet. Why? Well, because we need to have the reversal happen. So we know no matter what, we'll be making a new higher high here. But before we draw it in, we want to wait until we can circle it. And to do that, we're going to have to wait until this bar breaks below the low of this higher high. That will reaffirm to us that a reversal has happened. Even if it's minor and it immediately reverses the bar after, we know that when this bar closes with a lower high and a lower low than this bar, that a reversal will be confirmed. And at that point, we'll be able to draw this and circle it as our higher high of this trend. Now, as for trades, what are we looking for? We're looking to catch the peaks of these tests of the previous highs. Now, what have we learned in this lesson? I know we haven't actually started talking about actually taking trades. We learned a very important few facts. The first was to mark off any areas of importance, no matter how far they are back in the charts. This can include the previous year's close, the year's high of the market, the year's low in the market, or any previous areas that would result in a lot of support or resistance in the market due to them being significant barriers. We followed this by starting to outline and pinpoint when the market is making lower highs and lower lows. These show you the trend and who has control of the market, the bears or the bulls, the buyers or the sellers. And even when either the buyers or the sellers have control of the market, this doesn't mean that the market will go straight down. Often, these levels are retested time and time again as the market continues down or up. What we're going to be learning soon is to pick these peaks or these valleys and these retests of these areas as prime entry opportunities for our trades.